Hi. In this problem, we are asked to prepare the three financial statements: income statement, statement of retained earnings, and balance sheet. At this point, you should have either read Chapter 1 or watched the Chapter 1 concept overview video. If not, please do so before watching this video because it will make more sense if you do. You can also print out and keep handy the financial statement example document, which I put in the Chapter 1 form folder. This document provides for you the format and the formulas of the three financial statements: the income statement, statement of retained earnings, and balance sheet. However, the balance sheet in Connect will look different from this one because it's in the report format. This is the one that you're viewing right now is in the account format, which means that the liabilities and stockholders' equity are to the right of the assets, whereas in Connect, they will appear directly below the assets. You may recall from reading or from your concept overview video that we must begin our financial statements with the income statement because information from that statement is needed for the two other statements. Let's look at our directions. It says to assume you're the president of APEC Aerospace Corporation at the end of the first year of operations. The following financial data for the company are available, and we have a variety of financial statement accounts and amounts listed. In Part 1, they ask us to prepare the income statement, and the first step is to prepare the heading. First, we have the name of the company already provided to us, the name of the statement, and the third line is always the time period covered. Our directions say prepare an income statement for the year ended December 31st, so that's why we will choose for the year ended December 31st. An income statement and statement of retained earnings are both prepared for an accounting period or a period of time, and we have to tell the readers what they're looking at, whether it's the year ended, the month ended, the quarter ended, or the day ended. We have to provide them with that information, otherwise they won't know. Now we'll provide the labels: revenues and expenses. Now the reason why I knew to choose these lines is next to the labels, you're not allowed to provide any number information as you are here. See the little triangle? That means you can provide information. I know that next to labels there won't be any information to enter, so that's why I chose those lines for labels. Now, if you recall, revenues are amounts earned from providing goods and services to our customers. So I'm going to look up in our list here and identify all the accounts with the name revenue. As I look through my list, there's only one account with the name revenue, and that's sales revenue for $94,000. Sales revenue indicates the sales of goods. If we were providing services, we would call that service revenue. So I'm going to type in $94,000, and then because it's the only one, I'm going to provide the label total revenues and Connect totals for me. Now I'm going to be looking for all accounts with the word expenses in them. And I find only two here: operating expenses $60,000 and other expenses $8,850. So I'm going to type both of those down. And normally we list our expenses from greatest to least. Connect won't indicate that you're wrong if you don't. However, it's good to get into the habit of listing them greatest to least because that's the practice in the real world. Now I'm going to provide the label total expenses, and Connect automatically adds them down for me. Now we have to apply our formula. Revenues minus expenses equals net income if the revenues are greater, as they are in our case. So we have to provide, I apologize. There we go, total expenses there. The next line down will be net income because our revenues are greater than our expenses. If our expenses were greater, it would be a net loss. Now Connect does not calculate that for us, so we must do the calculating. $94,000 minus $68,850 is $25,150. Now I can check my work to see if I did it correctly by clicking on this blue box to the upper right. It tells us I can do this 5 times, and when I do so, it says that my answer is complete and correct. So I'll return to the question and then click on the Score Answer link here. After doing so, it will score my question, and the green check marks indicate it's correct. I'm going to remember that the net income is $25,150 because I'll need it for my next step of the problem. So I'll click on Next. The next step is to prepare the statement of retained earnings. Again, I have to provide the third line of the heading, which tells me the time period covered for the year ended December 31st. Now, if you recall, retained earnings are the accumulated net income or profits less those net income or profits we gave to our stockholders, called dividends. Now, we're not given, if we look in our list, we're not given the amount of retained earnings for the beginning balance, but we are given a clue because we're told at the end of its first year of operations, here are account and amount balances. Well, if this is the end of our first year of operations, then we wouldn't have had any beginning retained earnings from prior years. So we'll start out with 0. We're going to add in our earnings or net income from this year. We said it was $25,150. We could verify that by clicking on the previous here to show us our income statement, $25,150, and then clicking forward on the next. And we have to subtract out our dividends that we gave away during this year, and we'll have to find that from scrolling up. Our dividends are $1,100. We're subtracting them, so I'm going to show it as a minus $1,100, and Connect will calculate our ending retained earnings balance at December 31st at $24,050. So this is the net income for this period less the dividends for this period. We have no beginning retained earnings because this is a brand new company. I'm going to need this number, $24,050, on my next statement, which is the balance sheet, but I'm going to score this answer and move forward, and then click on Next. Okay, so our third and final financial statement is the balance sheet, and the balance sheet is prepared for a particular period of time, date in time, and the date here is December 31st. So we're going to choose at December 31st because our assets, liabilities, and equity change from day to day. So a balance sheet is prepared for a particular point in time. First, I put on my labels, assets. Then the next bar that goes across there is liabilities. And the final one is stockholders' equity. There we go. Now I must list my assets. Let's go up top and identify them. Accounts payable. Payable is a liability. That's not an asset. So accounts receivable is an asset. That's the right to receive amounts owed to you from from creditors who have made purchases on credit. Cash is also an asset. Equipment is an asset. And supplies is also an asset. Assets are economic resources controlled by the company that will provide a future benefit. I'm going to list them in liquidity order, which means nearness to cash. So the closest thing to cash is cash itself. The amount on that was $13,900. The next thing closest to cash is accounts receivable, because once your customers pay you amounts they owe you, you will be receiving cash. The next item is supplies, which will not be turning into cash. However, they will be used up within a year. So we call those current assets, which we'll learn about in the next chapter. Finally, we're going to list equipment. That's going to last a very long time. We'll list that last. After we click on the total, it adds our assets up to total $118,400. So now we have to just choose the label that indicates total assets. Our next section is liabilities, which are the debts of the company. We usually find the word payable in their account names, which means we have to pay those amounts in the future. And if we look at our list, we find one right at the top, accounts payable $33,130. This is for purchases made on credit. We also have notes payable $51,220. Let's list both of those. Accounts payable $33,130, and notes payable. By the way, a note means a promissory note, a promise in writing to pay principal plus interest at a future date. So we usually use these when we borrow money. Our total liabilities are $84,350. we're going to apply the label total liabilities, and then move on to our last area, which is stockholders' equity. Stockholders' equity consists of two portions, paid-in capital and earned capital. Our paid-in capital are amounts that stockholders have given to the corporation in exchange for common stock. So we're going to put their investment in the common stock account there, and the amount of common stock they have contributed or paid into the company is $10,000. The other portion I said was our earned capital, the amount of our earnings. And this is where we bring the balance from the statement of retained earnings onto the balance sheet. If you recall, the statement of retained earnings ending balance was $24,050. So our total liabilities and stockholders' equity added together are $34,050. When we take our liabilities, I apologize, our total stockholders' equity is $34,050. When we add together our total liabilities and stockholders' equity, it adds to $118,400. So $84,350 plus $34,050 is $118,400. We add our total liabilities and our stockholders' equity, and it must equal our total assets. Now we're done with this portion of the problem, but I'd like to point out something on the left-hand side here. There's a link to our ebook, and there's also an opportunity to print out the problem if you prefer to do them on paper and then enter your answers into Connect. In this problem, we don't have a link for hints, but in some of the exercises there are hints provided which actually work through a similar problem with you. So if you have any questions, feel free to email me or call me during office hours, and I'd be happy to help you. Have a great day.